Hello and welcome to another update on HBAR. Yeah, we are looking at the HBAR chart on the daily time frame. Obviously here a speculative cryptocurrency, but we're still holding above the relevant support levels. So on this time frame, yeah, there are basically two support areas that really matter. There is an upper support area, 9.8 cents to 12.8 cents. As long as this is holding, we can watch for higher prices. There are two bullish scenarios I'm tracking. Yeah, one is directly bullish, the other one might need another dip. But even in that one, and I'm talking about the white scenario, we could go a little higher in the short term. Only below 9.8 cents, I have to say, this pullback is too deep for what a fourth wave should do. Now, I'm tracking here a pretty ugly structure to the upside, yeah. Best I can tell is that the market formed a wave 1 to the upside here into the 2024 highs, and then a corrective pullback, which is either classed as a 1-2 setup or an A-B structure. And then we saw a rally, and that rally was large enough to be classed as a third wave, because a third wave should normally reach minimally the 138% extension. And yeah, it did that. It did get there, right? So from that point of view, the price did what it needed to do in a third wave. What we then do, we then try to understand what is the relevant support area that needs to hold to keep this uptrend alive. And we use standard guidelines developed as part of our model. And this support area is this one here between 12.8 cents and 9.8 cents. It is a support area that normally really matters for a wave 4 in a diagonal structure, because the move to the upside is not an impulse. It can only be a diagonal pattern if bullish, yeah? And this is the 61.8 retracement that is normally the key level that helps us distinguish between bullish and bearish momentum. Now, I have to say, because the move to the upside is not impulsive, there are different interpretations that can apply here. And so it's not the cleanest chart, but I would recommend, if you want to trade it, I mean, there are clear support levels that matter and that are being respected. You can see that the price is still holding that upper support area here. 9.8 cents and 12.8 cents is support. And it is holding this area. And so if we get a bounce from here, this might be either the third wave to the upside that could be coming as part of an already unfolding wave 5 if wave 4 bottomed in April. So that's the directly bullish scenario. Or in a scenario in which we might spend a bit more time in the range here, but hold above that support area. In the white scenario, we could simply extend the wave 4 a little bit. So A wave, B wave, C wave before we go higher. Yeah, that's definitely something to pay attention to. But only these two scenarios are only valid basically as long as we're holding 9.8 cents. And you can say that the blue scenario, in which the wave 4 already bottomed in April, is only valid as long as the April low holds. So the risk is basically for bulls that if the price breaks below 9.8 cents, we could see quite a dramatic decline. Because there isn't really much support in this region, yeah, between the 9.8 cent level and previous swing lows that formed in November 24, June 23, October 23, January 23. So this could be quite a rapid decline that could send us into the lower support region. The scenario that would then apply is maybe just this was a B wave rally, because it would clearly then just be a 3-wave rally that formed the top. And we move down. So a B wave rally and a C wave decline afterwards. So A, B, C. So to keep it very simple, there are two main support areas on the chart. Both still allow for higher prices, but honestly, the risk is if we break below the upper support area, the risk is that the market will, decline 50% basically. Yeah. So definitely something to keep an eye on. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Thanks so much. Bye-bye.